Welcome to Seeking Alpha, Alpha Talks Editors Roundtable. What moved the markets this week? The week ending Friday, April 23rd, 2021. A pretty eventful week. We had stocks selling off at the start of the week and then rebounding, and we're all set to go higher on Thursday after a very encouraging initial jobless claims report, before a certain notice from the Biden administration hit the news about increased taxes, especially on capital gains. And that spooked the markets yesterday, Thursday, causing some selling. Now, today, as we record this around noon on Friday, stocks have once again rebounded, but are still not up for the week, still not quite recovered these losses. The Dow is down about 0.6%, S&P off about 0.3%, and Nasdaq down about 0.4%. Interestingly enough, the small caps, the Russell, are holding up. They are the only major index that is up to the tune of about 0.3%. Anyway, I'm very interested in what my colleagues have to say about all of this, and I will introduce them now in no particular order. Brad Olison, VP of News, Kim Kahn, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. Let's kick it over to Kim to start us off.
I think that, as you mentioned, yesterday's sell-off is kind of indicative about how the market's been feeling this week. There was a sharp downturn as soon as this Bloomberg headline hit the wires that Biden administration is looking to double the capital gains tax to more than 40%, and they sold off and accelerated into the close that day. But I don't think the market is all concerned about the cap gains tax per se. It was just kind of an excuse. Otherwise, we wouldn't be back up today. And certainly, maybe the market would have sold off a couple of hours earlier when the exact same story was reported by the New York Times, and there was no market reaction. So it's kind of like one of these, kind of parties where someone jumps in the pool to try and liven things up, and then everybody jumps in the pool. It's, they seem like it, okay, we're done. This is a good excuse to sell for today, because the market was drifting before that.
Yeah, you raise an interesting question, which is, which one of us, of the four of us, would be most likely to jump into the pool at a party first? And would we dive or would we do a cannonball? Viewers and listeners can respond with their vote. I'm not sure who I would vote for personally. Anyway, Brad, winners and losers this week?
At least as far as the earnings season is going, that seems to be the predominant driver of those winners and losers this week. You're talking Netflix and Intel were among the biggest losers in the S&P 500 following their earnings results. Netflix missed a little bit on their subscriber expectations, and Intel is struggling with its growth and revenue trajectory. And Bank of America even came out with a note following the results, just citing the fact that there are multiple negative factors for why they're a little bit cautious on Intel's trajectory. Basically, the fact that they didn't have any sales growth in a year when everyone was buying tech, right? Everyone was buying equipment to set up work from home situations, and companies were expending a lot on technology. And so they thought that was kind of concerning. And interestingly, the other weaker names on that list included some of the airlines, which counterintuitively is weird considering some airlines are actually bringing back pilots en masse from furlough. So we had those announcements contrasted with United Airlines cutting their forecasts on expectations, despite American Airlines earnings optimism and beat. Other winners, I guess, were also earnings related. You had Intuitive Surgical, Edward Life Sciences, and Equifax were all major beats on the earnings line, and some railroads were stronger on M&A. So, obviously heavily earnings driven week. You can't really make heads or tails of major trends this week, other than just looking at some of these specific names and where they're pointing to optimism and caution.
Yeah, all right. On the earnings front, corporate news, Stephen, what were you watching there?
Netflix earnings, pretty interesting. I think that they had guided to 6 million new subscribers. They only got 4 million. That's a pretty sizable miss. And the company only guided Q2 added subscriptions of about 1 million. So that kind of, I don't know if they're turning into Cisco or something like that. They also announced a major buyback. So, is that company's, the pandemic's, maybe in the rearview mirror a bit, and they've really got serious competition on a number of fronts. So maybe that company is, finally moved out of its hyper growth phase and into kind of a mature phase where they're going to have to, kind of pay a fortune for more content. And they have a lot of strong competitors. I'm not saying the company's just going to disappear or go into a bear market or anything like that, but certainly, that space is maturing quite a bit.
All right, let's move on to the second segment of the show where we discuss our favorite articles, news items, seeking alpha, coverage, or other things that we may have worked on or perhaps been involved with, or perhaps not. And why don't we start with Kim?
I'm going to look at the short, unhappy life of the European Super League. This is a venture by 12 of Europe's biggest soccer teams to kind of break away from the Champions League tournament, form their own league. And it's almost like kind of private equity move where they were going to slash costs and maximize revenue for their group, kind of a more US league system where it's, closed shop, no promotion relegation. There's, collective bargaining agreements and greater revenue share. And it just failed spectacularly in 48 hours. Kind of almost a new Coke level of misfire. They just really failed to read the room as far as the fans are concerned. There were protests and backlash from the players, and then the governing bodies of soccer got involved and with threatening sanctions against the players if they participated in the league, and even politically. UK Prime Minister Boris Johnson was looking at ways like to have a massive windfall tax on teams that played. So it just collapsed. And I think really odd timing when they decided to announce it too. It was just kind of the middle of the pandemic, when fans, and certainly in England, can't go to games still. That's a lot of protests have failed because fans have said, oh, we still want to watch the match, but they didn't have that option. And, lockdown had ended in England. So yeah, a real big misfire there.
Yeah, you have to ask what they were thinking. Well, not so much what they were thinking, but how they weren't better prepared for the backlash. And, after to fold after just 48 hours, I mean, some of these things must have been anticipated. I mean, they must have known that this would upset fans, that the governing bodies, the UEFA and FIFA, would take major issue with it and come in and threaten to suspend their players and get teams relegated from their top flight domestic leagues and things like that. So that was all very surprising to me. My favorite part of this story is UEFA and FIFA now coming down as the protector of fans and protector of the little guy and opposed to greed. Right. That's the best part of this whole story for me, how they emerged as the good guys. I mean, these guys, anyway.
Let's not forget the investment angle, right? There's the Manchester United stock was one of the more volatile names associated with this story. I mean, it is, I love the read the room thing. I think is perfect. I think golf experienced its own attempt at this, and I think they're actually trying to restart it with their own side, I guess, superstar bonus pool. I can't imagine that's going to go over well with any of the fans either. Just definitely might be a little tone deaf.
Yeah,
it was so bad that JP Morgan actually apologized for providing the financing for the startup.
All right. Anyway, Brad, what about you? Your favorite story?
So the soccer story was all fun and it's kind of lighthearted and fun. I'm going to have to go a little more solemn on today's episode. Just the story in India, I think, is kind of overwhelming. It kind of flew under the radar a little bit for the past few weeks, and maybe that's to blame some of the Western media for not necessarily closely following it as much as we should. But COVID cases, you have a massive undercounting issue there. I think that's widely understood in terms of deaths and actual cases. It's getting to a point where they said, I think some of the testing percentages came back at 1 in 3 people, which when you're at that kind of level of positivity, that means that many, many more than 1 in 3 people are actually infected because you just can't test at that kind of rate to get any sort of efficiency. So highly concerning. I think we tend to focus on some of the Western stocks that are looking forward, like the airlines, bringing back pilots, all sorts of optimism about future travel. But worldwide COVID cases are, I believe now, with India's contribution, I think at like their highest level. So during this whole pandemic, so everyone's looking forward from an investment perspective, but do have to keep an eye on what's going on in India. What's leading, some of the experts are pointing to what they're calling a double mutant as responsible for some of this rise in India cases. And with the undercounting of deaths estimated at almost 10x, you can extrapolate out that to something like 20,000 a day, which is just historic, concerning. And our thoughts go out to our partners there.
Stephen, what about you?
Our capital gains tax coverage. It's one of those dark moments in media that we have to treat this kind of nonsense seriously. I can say this, having sold some assets at one point in my life and not really caring about the capital gains tax, but only idiots pay capital gains taxes. Yeah. They can double it, triple it. It's a jobs bill for wealth planners. It's a jobs bill for tax lawyers. Whether it's real estate, stocks, retirement accounts, 1031 exchanges, it's a blip. And to anyone who sold stocks because they're floating a possible capital gains tax rate hike, that's ridiculous. I think the last time they were hiked was probably 2013, and we've had a bull market ever since.
All right. And for me, my favorite story was, none of you guys have talked about it, so I'm going to, crypto sell-off. Crypto, Bitcoin is down, what? I got to look here. It was almost 10%. Bitcoin was down this week, which is really surprising considering it's such a stable hold of value and the kind of thing that's going to compete with major currencies one day. But to lose 10% in a week, can you imagine if the US dollar did that? Well, anyway.
And that is down 25% from an all-time high less than a week ago, or about a week ago. So
yeah,
which is actually much bigger move than you even described.
Yeah, exactly. So not exactly the type of thing you would want to put your savings into, although apparently people have. Good luck to them. So yeah, but that's it for me. But it isn't all bad. I mean, Coinbase I saw was selling off along with this, but then today they rebounded. So people going in there and doing a little bargain shopping, perhaps, so they think. So the crypto story is not over. This is just one small chapter, as we'll see. Okay, well, that completes this week's edition of the Alpha Talks Seeking Alpha Editors Roundtable. Thank you all for being with us. If you watched this video and want to hear the full audio version, you can download it through the Wall Street Breakfast podcast account that airs on Saturday morning around 6:30 a.m. Eastern. And with that, we thank you all for watching and listening, as the case may be, and look forward to speaking to you again next week.